All right, I think we can get started. Thanks everyone for joining. Big day today. We're gonna do a market deep dive with our friends from Animal Spirits, Michael and Ben. So my name is Rushi Shah. I'm VP of Product here at YCharts, and I'm sure you know Michael and Ben. But just a quick intro: Michael is managing partner at Ritholtz Wealth. Ben's director of institutional asset management. But they also have an awesome show, Animal Spirits, that we all love here at YCharts, and I'm sure a lot of you love as well. So excited to have you two here today.
Thank you, Rishi. We're excited to be here. I just want to object to the picture that I gave you. It's not a very flattering. I look a little puffy in that one.
I think we might have grabbed it from your website or something.
Yeah, you might have.
Michael, we did new headshots a couple weeks ago. You missed it.
I need to get a new one. I disapprove, but yeah, we're excited.
Well,
to be
this is a reminder. Yeah, thanks guys. Just a couple housekeeping items before we get into it. This is a Zoom call, so at the bottom of your screen, you should see that Q&A section. Go ahead and throw in questions in there. We'll try and cover some of them throughout, but also towards the end of the session as well. Also, this call is going to be recorded and sent to you, so keep an eye out for that in your inbox. Feel free to subscribe to our YouTube channel as well. We have a lot of great content there, just like this webinar here today. And lastly, please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be investment advice, nor is YCharts acting as an advising party regarding client funds in any way. And with that, let's go through the agenda today. So we got a couple good topics to talk about with the big Fed day yesterday. So we'll talk about the Fed. We'll talk about some regional banks. We'll jump into Megacaps, AI, and lastly, real estate. But before I jump into this, I did want to give you a shout out, Michael. It is a big day today. It's your birthday, so happy birthday.
Thank you, Rishi.
I do have a question for you. We asked our followers this. We asked them if they invested $10,000 in a couple stocks, what would the value be today? And they did pretty well. So I'll give both of you the floor. If you invested $10,000 in Disney on the day you were born, I know you mentioned on yesterday's show, your first trade was an option when you were 18 years old, but on your birth date, if you invested in Disney, what would it be today?
What year are we talking about here, Michael?
1985.
85. Disney. $10,000. I'm going to say
7 million.
I was going to say 4.
Let's do 6.9 million for the culture.
Less than a million.
Less than a million.
How much?
Less than $1 million. That's true because it's down a lot.
What was it at the peak though?
The peak was 2.1 million.
Oh, wow.
Which was pretty recently.
Michael would have been shorting the stock in his diapers, though. That's the problem.
Samson, that was way off. Yeah, that's not that much. All right, what's next?
What about Berkshire Hathaway?
Got to be 3 or 4 million. That one's got to be big.
Pretty close. 3.6 million.
Okay.
All right, last one, Apple.
All right, 11.
15 million. Ooh,
17.8 million.
Holy cow.
I knew I should have bought Apple when I was a baby.
Well, it's also another big day. And Michael, you brought this up when we were in our prep session. It's the 3-year anniversary to the COVID bottom. So I just thought I'd throw up this chart too. This is the total return of the NASDAQ, the S&P, and the Dow since March 23rd, 2020. So quite the return.
Rushi, this is just evidence for the Dow truthers to just chill out. It's the same thing as the S&P. No offense. Right? I mean,
pretty close. So even I think the S&P is down 15% from the highs, and we're still up 80-some% from the lows. It's not bad. That's kind of a full cycle, right?
Not bad.
On steroids.
All right, let's jump into topics here. We're going to start with the Fed. Big day yesterday with Powell coming out. I'll read off a couple quotes from his interview. The first one, the traditional indexes are focused on a lot on rates and equities. They don't necessarily capture lending conditions. Another one he said was rate cuts are not in our base case. I also have this Fed policy tracker dashboard here. So I'll just kind of scroll through this slowly and let you guys look at the data. But what are your thoughts on the Fed decision yesterday?
My initial read from the charts is just that I've got the Treasury yield curve pulled up here, is just that the bond market doesn't believe them, or the bond market is very confused because rates have been falling for the past 2 weeks. They fell again yesterday during the announcement or during his press conference.
And they're falling right now.
Still. So the Fed is raising and the bond market is saying, I don't believe you, or it's confused and 2 weeks later rates will be back up again. But it
No,
seems like
the market it's not buying it. So he raised the 2-year, I mean, the Fed funds is five is the upper bound now. Yeah, yeah, 5 is the upper bound. The 2-year is at 3.8. And the 2-year, do you have a chart showing the 2-year with the Fed funds or no?
Yep.
Yeah, it's
Yep,
right
I
there.
have it right here.
There it is. So these tend to track each other pretty closely.
the 2 years
for the
supposed
most
to
part, or at
lead
least on a
the
lag.
federal funds
Right.
rate, right?
Right. So that's the thinking, is that the market is saying, yeah, actually, we don't believe you. And it's falling again today. It's a 3.8. I don't know if I was surprised. It's just raising rates a week and a half after you bailed out or backstop depositors. It's a bold strategy, Cotton. It's just, I don't understand why they couldn't have just said, we still think that we have work to do on inflation. But given I know that maybe they're not gonna say turmoil, I know they're not gonna use that word, but given the stress that we've seen in the banking system, given the fact that our policy takes a while for the effects to be seen, that it operates on a lag, we're gonna pause here and reassess in May. I just don't understand why they couldn't have said something like that. Not to second guess the almighties, but I don't know, it just seemed like common sense to do that. Ben, what do you think?
It surprised me too, and I feel like they are being stubborn and not wanting to change their course. Like they had this in their mind, this is what they're going to do, and they don't care about the bond market. And it is, I don't know who blinks first, I guess. And it seems like the bond market is not blinking.
Do you think that they have internal discussions about their credibility and public perception?
Probably, but the credibility completely goes out the window if they raised rates yesterday and then they cut them in 6 months or something. If something else breaks, that'd be my biggest worry, is that they look even worse if they do cut now.
Yeah,
And
I don't.
the bond market is kind of saying that.
What is the CPI chart, Rishi? The one to the bottom right. It says CPI chart.
So this is just the overall U.S. Consumer Price Index percentage change. So it's going to be that. And then it also has the index year over year change. So you're starting to see that fall off in the rate.
So it's like
CPI.
total inflation and then the year over year.
Exactly.
That makes sense. Michael's inflation for the summer camp for his kids is running at 12,000% per year.
I wish I didn't say that out loud.
That was quite the
Hey,
hefty
credit
price
to
tag.
me. I'm transparent for the audience.
Yes, you are. Well, what else do we got here, Rushi?
All right, so moving on to something else that's got to be on the Fed's mind and what Paul kind of
Also,
talked about
Rushi, I just want
yesterday.
to say, I thought Michael had the award for most tabs open ever on his computer. I think you've got him beat here.
Oh, this is nothing.
No,
This is just a
those are rookie numbers. Come on. By the way, the S&P is about to go negative. It was up 1.6, I think, at the high, 1.7. Right. Anyway, moving on. What do we got next, Richard?
Yeah, moving on. Let's talk about the regional banks. So Paul made a few comments about it. We've all been keeping an eye on it. I built this stock screener in YCharts where I looked at just regional banks in the US major exchanges. There's about 367 of them. Out of those, there's 42 regional banks that are down more than 25% over the last month. So it's been
Just over the last month.
Yeah, just over the
Rishi-
last month. These are the actual returns here in this column.
Rishi, are you seeing value here in Silvergate Capital shares?
I'll ask you the question.
What's the PEG ratio on this, Michael?
Yeah, regional banks. So what day was this? So they made a bottom on Monday, March 13th, which was, I guess, the Monday before this one, 2 Mondays ago. And it rallied. It had a pretty big rally, and it rolled over again. It's about to make new 52-week lows, which is pretty remarkable.
Look at that 30-day rolling volatility. Look at those numbers on there. Holy cow.
Yeah, I have a chart of that too that I think is pretty
Oh, this
cool
is
to
a
look
good
at.
one. That's a good
So
chart.
on this top section, it's 1-day returns daily. So you're seeing, for something like PacWest, you're seeing that they experienced their biggest up days and down days over the last month. You also have that 30-day rolling volatility down here. So just kind of scrolling through these, you could see the point you were just making about that volatility.
So these stocks are doing so bad. We've seen a run on deposits at a lot of these banks. If their stocks are going to be essentially worthless or just fall in value all the time, aren't we going to see a run on employees too? Wouldn't you feel much safer working at JP Morgan than a regional bank if your stock bonus is worthless now?
Last night I was walking to dinner and a kid on the street said, "Hey, Michael, big fan," not to brag. And he said that he just handed in his resignation at SVB.
Right. Why would you stick around if those bonuses that are tied to equity compensation you have no idea what they're going to be worth?
So Rushi, I know you're a loyal guy, but hypothetically, if YCharts goes under, I mean, are you staying?
I'm YCharts for life here. I guess a follow-up question for you guys, you talked on your show a little bit about just if you're a normal person putting your money in a bank and you just don't know about these things, or you're not an accountant, or you don't analyze banks, like how do you react to this type of news? I'm sure you've both been getting a ton of questions from people that aren't in the industry. What are your thoughts on how you save money, how you put your money in the banks, things like that with all this volatility?
You go, Ben.
Well, we've had questions from people about, I'm not sure my money market is safe anymore. And I'm not sure that the money in my brokerage, what if my broker goes under? What happens? So people are worrying about stuff they've never had to worry about in the past. I think for most people, they're probably going to be fine. Most people don't have to deal with, having more than $250,000 in a checking account. It's mostly businesses and then wealthy individuals who I think are kind of waking up to the cash management stuff. It's pretty easy at any kind of bank to just have a cash sweep account that goes into a money market that pays you more than you get in a checking account, which most of them pay nothing. So I think for most people, they're probably going to worry for a little bit and then move on with their life. But I think it also has woken up people to the idea of, oh, wait, there's yields out there and other stuff. Why am I sitting here earning nothing if I have a lot of cash at hand? So people are finally waking up to the idea of cash management, even if it doesn't move the needle a ton. Going from 0% to 4 or 5% is kind of a no-brainer.
I think that the Fed, FDIC, and Treasury did what they had to do. I applaud their decision to stave off a crisis. And so I think that should probably stem the tide a little bit. However, if we see another one go under, I'm going to get pretty worried in terms of people just panicking.
Yeah, that won't be great. The Fed and Treasury had better hope that doesn't happen. I agree.
What do you think the response will be if something like that happened? I mean, they got to kind of backtrack on all the comments they made, or some of the comments they made yesterday, right?
Well,
I think,
because
eventually
they're not increasing FDIC insurance. I don't know why they would say that.
Well, it's like what the Mario Draghi thing he said whenever in the European crisis, he kind of said, we got it.
Whatever it takes.
They're going to have to say that eventually if more banks go under, I think. And that would be the thing that people go, okay, fine, we're good now.
Makes sense to me. Well, let's keep moving. Let's look at Megacaps. So this is our scatter plot tool, and I have the S&P 500 plotted with market cap on the x-axis and net income trailing 12 months on the y-axis. So you're looking at some of these outliers that are very common names today, like Apple, Microsoft, Google, you have Amazon, Berkshire, etc. But let's take a look at this from 20 years ago. So if I just change the date here.
Oh, Rishi says Berkshire too. It must be a Midwest thing.
That's right.
Say Berkshire.
I said Berkshire. Or Berkshire, I think.
And Bezos. So what are the only ones in there still? So you're showing these same stocks. So a lot of the tech names were much, much smaller 20 years ago. That's interesting. So you'd think up and to the right is higher quality, and that's where Apple and Microsoft reside today. And Citigroup is one of those companies 20 years ago. That's pretty.
Where?
I think this what's right below Exxon there. He just clicked on it. So
wow, that's crazy. And what's below it?
GE.
Both of those stocks are down 80+% from there. Probably. I mean, Citigroup is down, I think 95, 96%. Wow. GE's probably down 75 to 80% from there. So I think the takeaway here is 20 years from now, there's going to be some of the stocks in the top 10 that are completely out of it. That's probably a better bet than all the 10 right now are going to remain. That something is going to be crushed in the next couple of decades because of competition or bad management or whatever, and it's going to be gone. Just short it now, Michael, and you're golden.
I'm racking my brain about what it could be in the top 10. Tesla?
Facebook.
Is there a new acronym that they're going to have other than FANG? Because I feel like that's going to change as well, right?
How about Exxon? Exxon.
You know what? I would definitely not be shocked if Facebook is much smaller in 20 years than it is today. That would not shock me at all.
Yeah, Exxon and Tesla probably have a decent, and then one of those big FANG stocks, you're right. One of them is probably going to stumble at some point, or there's going to be another product or service that's going to overtake them.
And is this just another confirmation or a lesson for investors that it's kind of a fool's errand to try and, win the lottery and pick the right stock out of these 500? Or how do you approach this as just from a personal investing standpoint?
I always look at these kind of stats where they say that like the biggest stocks make up a huge percentage of the winnings overall. I can't remember what the exact number is, but Michael and I have talked about studies like that over time. And my biggest takeaway from that is always like, this is why diversification is so important, because yes, you're going to own the losers, but you're automatically going to own the winners too, that rise to the top, and picking them ahead of time is very hard.
Yeah, there's that post, the agony and the ecstasy from JP Morgan about what percentage of all stocks have a gigantic decline that they never recover from. I think it's 40%. In fact, I know it's 40%. 40% of all stocks have a decline of 70% that they never recover from. So we all know what the data is, what the literature says, but it's fun. And so sometimes you can't help yourself. So as long as you pick lottery tickets in a reasonable manner, responsible manner, small portion of your portfolio, I don't think there's anything wrong with that. In fact, that's what I did.
Makes sense. Well, one of the big bets that a lot of these names are making very recently is AI, right? So let's take a look at some AI statistics. I built a model portfolio. This is just a weighted average portfolio. I think Bank of America came out with this. This was 10 stocks they recommended to invest in AI. And so here's some of those tickers. You have things like Baidu, Microsoft, NVIDIA, et cetera. And this portfolio, over year to date is up about 32%. And you compare that to some of, the XLK ETF and NASDAQ and the S&P. What's your reaction here? How are you thinking about AI? How do you bet on AI? What are your thoughts there?
Ben's a skeptic. Ben, I'll let you defend yourself. Defend your take.
No, I'm not a skeptic. I think the technology is wonderful. I've just decided I'm too old to have my ear to the ground on new technology, so I'm going to wait till it comes to me. I think this is one of those areas where AI could be the next huge thing, and you still might not be able to make money off it in the stock market. Like it could, the company that ends up winning here could be a company that no one even knows about yet, or it's some other company that we're not thinking about in the way that it's going to use it. So if I was like a stock picker or an analyst, I would say invest in the picks and shovels, because that's what people say. I don't know if investing in picks if investing in the picks and shovels actually worked for people in the gold rush. I think it's something people just say. But because what if there was like 35 picks and shovel stores, right? What if there's too many of those? I don't know, but I think trying to bet on this trend is going to be harder than people think. Especially like you said, Rushi, there's 10 stocks in here. If this is successful, I don't know.
Where's the ETF? Is there an ETF yet?
That's a good question.
I feel like Roundhill's going to make
so.
one. There should be.
I'm sure there's one in the pipeline.
I'll take the other side of that. I think that there will be trillions of dollars worth of market cap created on the backs of these companies.
Well, that's not what I'm saying. I'm saying picking those companies now, as this thing is still in its infancy, is going to be very hard to know what the winners will be. I think that the winners of tomorrow are not going to be the companies you choose today. That's my thought on the idea. But if you know the winners in advance, Michael, please.
I didn't. That's not what I said.
Fill us in.
What you guys talked about this a little bit in your show yesterday. What are your thoughts on using AI in your normal day to day? Like if your kid was writing an essay, they were using Chat GPT to do that, or
I
what
will
about
be
the
all
wealth
in.
management?
I will be all in. I'm not there yet, but we're checking some stuff out. There's some companies that we're talking to.
Yeah, we've talked to a couple companies that are interested. I think that a lot of people have asked us, like, well, what does AI mean for the future of wealth management and financial advisors? Could you have an AI that acts as your financial advisor? And I think people thought the same thing when robo advisors came out. Obviously, AI is a little bit of a bigger step forward than robo advisors, but I don't think it takes away from the need to have a human, but I think it can help the advisor community be a lot leaner and more efficient in how they work with clients and maybe outsourcing some of the tasks that they don't want to do.
Definitely. And something we've learned from our users too is people love having that human that they can talk to, and that actual advisor that can talk to them when there's crazy times in the market. So
Yeah, it could take a long time for most people to really trust that an AI like has your best interest at heart, right? So yeah.
cool. Well, the last topic we had to cover was real estate. We got our economic data page here, which Ben, Michael, I know you guys use this a ton to build charts and things like that.
I've done that too.
Also,
One of these days.
Ben, I know you have your real estate dashboard, which I shared to my account. How are you looking at this data? What are your thoughts on real estate? What's your assessment here?
I was talking to a client today who invests in rental real estate properties, and he was giving me some anecdotal data about there's just such little inventory, and he's probably more hopeful because he has a big stake in real estate, but he's saying his whole thing is he feels like, man, at one time it really felt like we could see a 10, 15, 20% drop in real estate prices. But every time, because inventory is so low, every time a house comes for sale or mortgage rates drop, 50 basis points, buyers come rushing in whenever anything of high quality hits the market. So I think if housing prices were up 50% since COVID, and mortgage rates more than doubled, most people assumed it makes sense. Prices should probably crash. If they don't, I think people are going to be very confused. But I think if rates come back down to 5 or 6% or something, there's enough young people who are ready for their household formation years that it could be confusing for people if housing prices don't crash.
Rishi, because well, not because anything. I've got 2 minutes left. So what are some hard hitting questions for me?
All right. Well, I think we're towards the end of the content portion. So let me take a couple of questions from our audience here. Let's see.
Here's a good one for you, Michael. Are you a believer in RSI relative strength indicators? That's a technical analysis question. I kind of understand what it is, but I'm not a big proponent.
Do I believe in the formula? Do I believe that you can trade off of it successfully? What's the exact question?
It just says, are you a believer of relative strength indicators?
Sure.
Why don't you explain to us what they are? Could you do that
So
or not?
I can do that. Yeah. So I believe, well, there's 2 types of relative strength. There's like, if you're just dividing one stock by the index to compare to how it's performing. So if a stock is going up, but the index is going up, you want to know, well, how strong or weak is it compared to the index or compared to its sector? So there's that relative strength. And then there's also something called the relative strength indicator, which is RSI. So I believe that's what this person is asking for. And I think the most common measurement is over a 14-day period, and something can get overbought where it's over 70 or oversold where it's under 30. And I think paradoxically, you don't want to say, oh, a stock's overbought, I want to avoid it. I think those are the stocks that you want to be buying. If something is overbought, that's a good thing, as JC would say. That means that there's an overwhelming amount of demand. And similarly, I would definitely avoid stocks that are oversold. Unless it's the bottom, and then you want to buy.
Hey, compliment to you. All credit to you. That was a great use of paradoxically in a sentence. I can't think of the last time or if I ever used that word before. So credit to you for using that word.
Can I just say something? My memory is so bad. I don't even remember saying paradoxically. I don't remember what I just said 30 seconds ago. Did I say it?
You may have blacked out. Rushi, everyone in the questions here wants to know how they get your economic dashboards. You created these and you shared them with us. So everyone wants to know how
Yeah,
you get
you know
these great
what?
dashboards.
Can I have that, please? Can you send that
Yeah,
over?
I'll share it to your account. And for anyone on the call, just reach out to us. We'll get that added to your YCharts account. Hey Ben,
Because
I got a question for
I-
you.
Rishi, I'm sorry I do have to run, but this is great. Thank you so much for having us, and we
All
appreciate
right,
everything you do
happy
for us.
birthday, Michael. Take
All
care.
right, bye guys. Thanks everyone for watching.
Ben, another question came in that said, what indicators do you review on a regular basis? I know we kind of breezed past this real estate dashboard that you use. What else are you looking at on YCharts? How else are you using the tool in general?
it is, I mean, the simple way to do it would be, you go on here and you look at like the schedule of economic indicators when they're coming out. I'm not really that in tune. Like, I think the importance of economic indicators kind of comes and goes. For a while there, it was the labor market, so you'd be paying attention to the labor market, and it's kind of some of those things where the things people are paying attention to. That's what I kind of try to dig in on, and so I never really paid much attention to the labor market until it was on fire these last few years. And then you get into number of job openings, right? That was a big one that I was looking forever. So it's like job openings versus the number of people who are employed, and then you kind of go down these rabbit holes, and so I think you kind of build up an index of this stuff. So labor market stuff is important. I do have the real estate dashboard and been paying attention to that a lot. I do use a lot of the real estate stuff in my blog posts and for the company. And so I think a lot of it depends on the stuff that you're looking for. And that's one of my favorite parts about using YCharts, is that I do have the stuff that I pay attention to regularly, but it can also change depending on what's going on and within the markets and the environment.
Yeah, definitely. That makes sense. And another question here, which is also, about market timing and what's going on right now. How are you thinking about value versus growth? I could go back to that scatter plot and show how many of those are considered growth names versus value. What are your thoughts on that in general?
I've written a little bit about this over the years, that there's some quants would disagree with me, but I've looked at the long-term numbers, and there's a pretty decent relationship between higher interest rates and higher inflation and value doing well, and lower interest rates and lower inflation and growth doing well. And you can't take that to the bank, because these relationships are never, the correlation causation stuff is never one-to-one, but it does make sense that, more high quality cash flow producing low growth companies that are typically value stocks would do better when the hurdle rate is higher, and that growth stocks would do better when the hurdle rate is lower. But I don't think it's as easy as, if rates fall, tech stocks are going to go to the moon again. Tech stocks have come back a lot this year, but I think part of the reason for that is just that they were down so much last year as well. So I do think people probably put a little too much faith in the whole interest rate thing. I think that can help understand what's going on at some points, but I don't think that you can take it, because if you look back at the late 90s, tech stocks were booming in the dot-com bubble, and interest rates were 5 or 6%. So there's always exceptions to the rule. So I think if you have some sort of, rule of thumb like that, where I'm only going to invest in tech stocks when rates are low, it's not always going to work out for you.
Awesome. All right. Well, I think that's most of the questions related to the market in general. If there's anything in there that we didn't get to, we'll definitely get an answer back to you. And the one question I did want to cover here, someone said, if you're a beginner on YCharts, how do you learn more on how to use it? That's kind of what I wanted to close out with anyways. So, there's great ways that Michael and Ben use YCharts. They use it every day. You hear it on their show and everything. So, they're using our chart screener, data table, things like that. But if you have more questions, you do get 20% off of YCharts if you mention Animal Spirit. So please be sure to do that. But start a trial. Let us know that you want to learn more, and we could definitely help you out.
And I think the way that I when I'm looking for something new, I mentioned that there's some things that pop up that, like, I never thought about before. Just the search function is really easy. You just search for some sort of keywords, and it lets you know within that keyword how many different places that you can find that. You can search through, you can look through lists. And I think just the simple search function, if you're just starting out, is a great way to play around and understand what the different features are.
Yeah, definitely. All right, Ben. Well, thanks a lot for your time. We really appreciate it. Thank you, everyone, for joining. Like I mentioned, there will be a recording sent to all of you. If you have questions, please feel free to reach out. And with that, I think we can wrap up. So thanks, Ben.
Thanks all. Appreciate it.